Okay. See if we have audio. I'm just waiting for the captions real quick. Why can't I turn my captions on? Whatever. Um, Hopefully you can hear me. Oh, we'll get started like 60 seconds. Let a couple people jump on. I know we're a day behind. We're supposed to do this on Tuesdays. Um, we're doing a lot of really exciting things right now, so all good things. We're busy, but that's good. What time is it? It's 4:02. All right, let's give it 30 seconds. Yeah, hopefully you can hear me louder than last time. I adjusted my microphone settings and it should be good to go now. I just got some outdoor furniture and got that all set up. So finally, for the new house. So I was just out back. The sun's out, and I laid down on the new outdoor sectional that I got and fell asleep. So hopefully, I'm all nice and sun kissed and looking good. What's up, Amy? Okay. All right. So we are gonna get plugged into it. As always, if you're not watching this live, you can watch the recording. They are in the group. All of the other weekly sessions are also in the group. You can just go look them up by week and number. Just search in the group if you're looking for them. We are also uploading these to YouTube. All 4 years in of us putting out training and content, we've never built a YouTube channel. So we're doing that. We're finally doing that. All this is also going on YouTube because obviously, I don't know why we haven't done that yet. But all right. So I know the weather's getting nicer. I know people want to be outside. I know it's later in the evening on the East Coast anyway, early evening West Coast. So you guys probably want to go get some sunshine. So I won't keep you too long. We'll get right into it. Excuse me. So on this week, we're going to be talking about the step-by-step process of building and scaling credit and getting, ideally an 800 credit score. Now, for this presentation, I kind of used the analogy of building a home or building a structure or, constructing something just for easy understanding. Okay. So before we build, let's say, a home, you have to clear the space. You don't just find a spot with a pile of junk on it or whatever's on it and start building on top of it. That doesn't really work, right? That wouldn't be a very solid foundation, would it? It would just, it doesn't work, okay? So you have to clear and demo the spot first before you start your construction. Your credit and building your credit is no different. Okay, if you got a lot of ugly stuff on your credit, if there's some negatives, some things that need to be cleaned up, this, that, or the other, you you don't want to skip right to the building process. You got to clean it up first because otherwise you're building on a crap foundation. So we got to clear the space first. Okay. So we're going to start that off with reducing utilization, right? Which is 35% of your score. You're going to want to pay down what you can. And I understand a lot of people can't just flat out pay down all of their credit utilization in all cases, right? So pay down what you can, consolidate what you can't into an installment instrument like any loan works. I mean, you could even use an auto loan for that, the ones that don't require title. But any personal loan or consolidation loan will work that because it doesn't report the same way. So use a personal loan, consolidate, get your utilization down. All right, this is one of the first steps. Now, if you cannot even get a small personal consolidation loan, that means you got some pretty serious credit problems. That means you got some negatives on there. Okay. So if that's the situation, we start taking a look at credit repair. And again, every item on your credit report can be removed, good and bad. You do not have to wait for the statute of limitations, which is 7 years, for negative items to just fall off your credit report. That's how long it takes for them to just fall off, but you can remove them at any time. Okay, there's a lot of laws on your side with credit reporting. Okay, so I always recommend working with a professional. You can do it yourself. You absolutely can do it yourself, but if you're anything like me, I like to just hire pros. Okay, just get it done the right way, the first time, the quickest way possible. Okay, and then we move on to inquiry removal. This is part of credit repair, and this is also something you can do yourself. And we'll talk more about that. You can clear off inquiries as fast as I think the fastest I've gotten inquiries off is 4 hours, just calling the bureau myself and getting them off my report. Okay. But, it's pretty easy to get them off in 24 hours or a couple of days, depending on the method you use. You're going to want to remove all inquiries. People don't even realize. I've seen credit reports with 50 plus inquiries in the last 6 months on their reports, and I'm just sitting there thinking, like, what the hell are you doing? Are you just running your credit everywhere? Are you just handing out your social to everybody? I don't know. People are weird. But take a look at it, figure out what's in your report, get your inquiries cleaned up. Don't dispute inquiries that were pulled for CLIs. And again, if you watched one of the other trainings, I forget which one it was, but if your credit limit increase is going to do a hard pull, you want to do those last, right? You want to prioritize the soft pull CLIs first, right? Run up the soft pulls first. Any inquiry not attached to an open personal account can be easily removed, which also encompasses any business account. You can remove those at any time. Okay. And then, of course, we talked about last time, just clean up your information. When you take a look at your credit, and this is pretty common. When you take a look at your credit report, you might have 3 variations of your name on there. You might have old addresses that you haven't lived at in 10 years. What you want to do in there is just go remove any old, outdated, inaccurate information. Make sure all of your names match up, your address is current. Just clean all that information up. Okay, we're cleaning the space so that you can build your home, right? For the analogy that we're using here. All right, so that's step number 1. Now, to touch on some of that a little bit more detailed, one method that you can use to remove collections and charge-offs, and really a lot of items, is remove the address associated. Now, if that's your current address, that's not obviously an option to you, right? You'd have to take some other avenues to get that done. But if it's an old address, well, there's a tool in your tool belt for that. And you send in a personal address update form to the bureaus, one to each bureau, always certified mail. Don't sign it. This is going to increase the chances removal for that item tremendously, right? It's hard to verify. And then again, on removing inquiries that are not attached to open accounts, it doesn't matter what the inquiry is for, mortgage, car, credit card, as long as it isn't attached to an open account, you can remove it. All right. In most cases, you don't want to challenge inquiries to open accounts, as there is a chance of account closure. And that really almost exclusively applies to credit cards. Now, there is a method of obtaining credit cards, removing the inquiry immediately before the line reports, so that nobody's the wiser. Let's say you got an approval, you go over there, you immediately remove the inquiry before the line reports, and the line isn't reporting as far as anybody else is concerned. It wasn't there, or it was a denial, or XYZ, right? So you remove it before the line reports. Now, that comes with risks of its own, something that you have to do very quickly, and don't necessarily even recommend it, but just for the sake of transparency, it's an option. Okay. And again, anything that is associated with business and not personally reporting can be removed even if it is an open account. All right, just to be clear there. So once the foundation is laid, you reinforce it. Now, a lot of times, what we see after somebody goes through pretty heavy credit repair is, like there's nothing on the report. There's just nothing there, right? Very thin profiles. So trade lines we spoke about before, they are not a miracle solve all like they used to be, but they can augment your profile. Okay, they're not going to hide your utilization. They're not going to get you maximum approvals. I don't care what your TikTok guru said. You can't just go get gigantic approvals with nothing but trade lines on your report. Okay, it does not work like that. This is reality, not TikTok guru land. Okay, so however, it can augment your profile and just thicken it up a little bit. 70% of lenders are still taking trade lines into account. It doesn't mean it's the determining factor. They're just taking it into an account. Now, what an example of that is, a trade line's like authorized user is like piggybacking off of somebody else's credit. You can think of it that way. Let's say you only have a $1,000 limit card and it's only 6 months old. You find a friend or a family with aged high limit cards. Like, for example, your dad has a $50,000 limit with 6 years of age and perfect payment history. He adds you as an authorized user, and now that $50,000 limit and years of perfect history shows as your history and your limits on your report, right? So now that comes with its own risks as well, okay? Now, if you're using friends or family for this, you, just like their good habits are going to report to your report, their bad habits will as well. Okay, and I've seen that before where somebody was an authorized user on a friends or family to augment their own profile, and it was working for some time, but then that friend or family started, falling on some hard times or whatever the case may be. Their utilization went through the roof. They, in some cases, they get a late payment. That reports to you too, right? So if you're going to use friends or family for this, you need to make sure that they are responsible with their credit. Okay, because their good habits report to you and so do their bad habits. All right, you only want to really do this with 5K plus limits, 10K plus really, that are 24 months plus old. Now, if you don't have friends or family to do this with, there are several reputable vendors for authorized user trade lines online. Okay, I'm not going to mention any right now on this call just because I don't personally endorse any. But if you want to message me, I'll send you a couple of vendor options that we've personally used for our clients in the past. Okay. All right. Now that we've cleared the space, laid the foundation, reinforced it, we're going to build the walls and add floors. All right. So we're going to talk about credit tiers. It starts off with secured. Okay. If anybody knows what secured is, hopefully you do by now. Hopefully you've been following along. You're basically all right, let's say you want a $500 secured card. You basically give the bank $500 and they hold that for you as collateral. All right, and then they extend to you a $500 credit limit, and that reports to your credit and starts building credit. Now that's one of the starter things. If you have no credit, that's the best thing. That's typically, in some cases, your only option to get started building credit. Okay, pretty much everybody can. I don't know that there's an instance where you wouldn't be approved for a secured card, and the reason for that is why. Does anybody know why they'll pretty much approve everybody? Because it's collateralized, it's secured, right? You're giving them the cash. They're holding the cash as the collateral. They're giving you a credit limit, so it's no risk to the bank, right? And then we moved from there to subprime. These are okay. I mean, it's part of the building process. And then we'll work into credit unions. And then we'll go into regional and national banks. Okay, that's kind of an overview of the process. And I'm going to get more specific on this over the next couple of slides. But 1,000-foot view, that's kind of what you're looking at. Now, building large credit lines, you're going to want to focus on 5 to 7 products with great benefits and terms. So as you know, doing anything in life, especially this, you want to map it out ahead of time. right? Like have a clear, okay, I'm going to do this. When I get to this, I'm going to do this. When I get to that, I'm going to do that. Map it out. Don't just willy nilly freeball this stuff. Most people do that. Most people are broke with terrible credit. Okay. You don't do it. All right. Have a plan. Your goal is going to be at least 5 figure limits, right? You want at least 10,000 to be funding eligible on the credit side, and leverage them against each other with CLIs. If you don't know what a CLI is, it's a credit limit increase. You're going to want to prioritize the ones that are soft pull first, do the hard pull ones next. And what I mean by leveraging them against each other is you have a card over here with a $5,000 limit, and these guys over here with a $1,000 limit. You can be like, hey, look, I want to do more business with you. You call the bank, hey, look, I want to do more business with you guys, but over here, this guy's got me a $5,000 limit. That works for me. I need that. If I'm gonna do more business over here with you guys, I need you to at least match that, and then I'll start working, doing all my stuff over here with you guys. Can you help me out? Right. So that's what I'm talking about. A lot of people don't even try to negotiate this stuff. A lot of the even interest rates are negotiable to an extent, right? So use some salesmanship. It's your life. Don't just take what's handed to you. Get in the driver's seat, drive it a little bit. Okay. And that's what I mean over there. Item 4 is submit comparable credit card statements to show activity and limits. Hey, listen, I got this over here. This is what I'm doing with it. I'm paying it off. I need you to match that if you want me to do more business with you. I'd love to do more business with you, but I can't with a $1,000 limit. Help me out. Right. So get in the driver's seat and start taking that, control of your finances. All right, let's talk about credit tiers. So I kind of broke this down into, I believe, 5 tiers. Okay, so tier 1, your starter cards, right? Tier 1 houses secured cards, balance transfer cards, starter cards, subprime cards. Most cards here do not offer rewards or have annual fees. Sign up bonuses and monetary incentives to get tier 1 cards are scarce. And when you're in this stage of the building process, you don't even want to be thinking about those things. Oh, what are the benefits? How many points do I get? What's the sign up bonus? Like, it's nothing because your credit sucks. Okay, so don't worry about that right now. Make yourself an asset first. Okay, so some examples of personal cards are Capital One Platinum. That was one of my first personal cards and helped build my credit quite a bit. Capital One's great. They're terrible and they're great. They're great because they report to all 3 bureaus. They're terrible because they report to all 3 bureaus, even on the business side, which is pretty rare. Not many banks do that. It's kind of annoying, but they're great because you can build all 3 bureaus with one personal card. Okay, so if you're in this stage, Capital One is great. Okay, Chase Slate cards, City Simplicity, and Discover It secured card. Those are all great tier 1 starter cards. Okay. Tier 2 is no annual fee cards. There is, this is where most no annual fee rewards cards reside. Most cards from this tier are long-term keeper cards. And let's elaborate on that a little bit. Okay. Back here, if you're building in the starter cards, these are not cards that you keep forever. Okay. Maybe the Capital One Platinum, but and those are just examples, but like secured cards, student cards, things like, they're not cards you want to keep forever because although you want to keep things for age, you also want, when you get up to the high tiers, tier 4 and 5 credit cards, you don't want those low, kind of crap tier cards on your profile. So you start pruning, right? You start cleaning the garden a little bit. You removing all the garbage. So they have their use, they have their purpose, but it's not permanent. Okay. So over here, this is these are more long-term keeper cards because they have no annual fees and they earn rewards and they just look better on your credit report. So cashback is the most common type of rewards, but points and miles can be earned too. Sign-up bonuses in this tier are smaller and easier to earn than those from higher tiers, which we'll get into. Co-branded airline and hotel cards start in tier 2. So if you do a lot of traveling, this is good for you. Many of these cards are stripped down versions of the higher tier cards. They also serve as downgrade options from tier 3 and 4 cards. Okay, so let's say you just you don't want to pay the annual fee, you can't justify it, whatever the case may be. And if you've watched the other videos that we've done, you know that annual fees can be waived, right? You know how to do that. Anyway, some people only have these cards, and usually those who do either prefer earning cash back or don't like annual fees. All right, but those who travel often will keep these cards as supplementary cards that will help them earn more rewards. And some examples of personal cards in tier 2 are American Express Everyday, American Express Hilton, Chase Freedom, City Double Cash, City Rewards, Discover It, FNBO Evergreen. And again, those are not that's not an exhaustive list. Okay, these are just a handful of examples for each tier. So grain of salt with everything. All right. All right, tier 3, mid-tier cards. Tier 3 houses some of the highest earning and most valuable credit cards for travelers. Cashback gives away to points and miles. Large sign-up bonuses are also common, but not all cards offer them. Most cards in this tier have annual fees of around $100. Plus, tier 3 is a sweet spot for business credit cards. Business owners and entrepreneurs get both excellent perks and earning structures for a modest annual fee. Additionally, tier 3 is also where most co-branded airline and hotel cards reside. This is because most co-branded cards have the characteristics of a tier 3 card given their annual fees, earning structures, and perks. Okay, so examples of personal cards are American Express Green, American Express Hilton, Bank of America Premium, Capital One Venture, that's a really good one. Chase Sapphire, another great travel card. Chase IHG and City Premier. Now we're getting up there. You're really building your credit profile at this point. Okay, those are just examples. Tier 4, premium cards. Tier 4 is the highest tier in which you can directly apply for a card. Okay, cards in this tier have annual fees of around $500 and come with significant perks. Tier 4 cards earn points and miles, but not like Tier 3 cards do. That's because Tier 4 cards are focused on luxury travel, perks, and credits. Issuers such as Chase and American Express have changed the perks on their premium cards because of the COVID-19 pandemic. A lot of things in finance changed around that time. Since, of course, 2020, perks on general travel cards are oriented towards a luxury lifestyle as opposed to travel. Conversely, perks from Tier 4 co-branded cards specialize in luxurious travel, hotel, or airline-specific perks. Most cards in this tier come with at least one travel credit that helps to justify high annual fees. Your mileage may vary with these credits because they are not all created equally. Nonetheless, Tier 4 cards are great for travelers who want to make their trips better and cheaper. We use these ourselves. It's great. The lounges are great. Skipping lines at the airport is great. All right. Examples of personal cards are American Express Platinum, American Express Delta, Chase Sapphire, excellent for travelers, Capital One Venture X, which is one of their, if not no, they just put out a new one. It's almost their highest tier with Capital One. Okay. So tier 5, moving along here, is invitation only cards. Tier 5 houses invitation only credit cards. Only a handful of cards in the world are exclusive enough to make this apex tier. Perks and benefits rule tier 5, as that's what these cards are really meant for, right? At the end of the day, after you get into 2 or 3, tier 2, 3, they're all the same. You 10, 20, $50,000 credit limits, they work the same. It's just a credit card, right? So what's the difference? Perks and benefits. Okay. So the American Express Centurion card, also known as the Amex Black card, and the JP Morgan Reserve card are the two most exclusive credit cards in the US market. But there are other cards like them from other countries. Okay. The Amex Centurion card offers the perks of the Amex Platinum and then some. It has a $5,000 annual fee and a $10,000 initiation fee as of April 1st of 2020. The JP Morgan Reserve Card requires 10 million in assets as a private reserve client at JP Morgan Chase, which if you're not a private client at Chase, it's an awesome benefit. I've been a private client with them for 4 or 5 years, something like that. A lot of good perks. But this card is almost the same as the Chase Sapphire Reserve. Okay. So if we're talking about, and I'm going to be totally transparent with you guys, like a lot of people online are like, oh my God, he has a black card. Oh my God, he's rich. This, that, and no, like honestly, he's more dumb than rich because there's lower tier cards that offer the same benefits as that, and they don't cost $5,000 a year and $10,000 to sign up. Okay, so it at that the black card, in my opinion, is just a reckless flex more than it is anything else because it's pretty hard. It's pretty hard to justify $15,000 just for a credit card, right? Like you don't get a butler with that, right? So it's just a flex. That's all it is. Okay. Yeah, like Kevin just said, it's a little overrated. All right, but and a lot of people don't know that. They're like, oh my God, black card, financial guru, rich. No, dumb is what they are. Okay. All right. So your new construction, we've put up the walls, foundation, reinforced everything. Where are we? We should be looking something like this. Okay. Now, what we neglected to talk about is credit mix, right? It's one thing you can get here or close to here just with credit lines. Okay. If you want to get into the 800s, though, you're going to have to get some other forms of credit. Okay. Like installment loans, right? And I said this on a couple of videos a while back that I was in the 780s to 790s for years, never broke into the 800s until a couple of months ago. And the reason why was because I didn't have any installment loans. I was debt free. I paid for everything. I bought all my vehicles cash. I bought my home cash. I had no installment loans, right? So I was in the 780s, 790s for years because of that. Now I'm finally into the 800s. And a way you can do that is really just get any installment loan, turn around, pay 80 or 90% of it off immediately, and just make the minimum payments going forward. Like you don't have to need the loan to get it to thicken up your credit. You can do this with auto loans too. Just go get an auto loan, pay it off like 80 or 90% within 90 days, and then make the minimum payments going forward, and that'll report excellently on your credit report. You don't have to buy a car with it just to use it like that. But to get into this range, 720 plus, zero to minimal hard inquiries in the last 6 months, 2+ years of credit age, 5+ is ideal, no derogatory marks or late pays or collections, anything like that. 3 or more primary accounts reporting 10,000 or more in personal credit, and a good mix of credit. Okay. This is going to have you in. If you don't know by now, I'm going to tell you again that just having a good score does not mean you have good credit. Okay, I'm going to say that again. A good credit score on its own does not mean you have good credit. I've seen people with 700 pluses, 750s get denied for stuff. I've seen 650s, 680s get approved for stuff. Okay, so there's a lot more to the picture than just your score, and the more stuff in that picture is what's laid out on the screen right now. Okay, these are the other data points that institutions and banks are looking at that you need to start paying attention to. Okay, just because you hit 700s, like cool, but what more is there to the picture? Yeah, and then Kevin just said, interesting how much age is a factor in acquiring an 800 score. It is. It is. You can get into the 700s, even high 700s with just credit lines, maybe even a good credit mix. But from there forward, it's just a time game. Okay, it's just a time game. You just gotta put the reps in, use them, pay them off, you know, get a couple years doing that. All right. It's just a building game. All right. So to kind of begin wrapping up here, I built a program, what was it, last year, 2 years ago, maybe 3 years ago. I don't know how long ago it was that I built. Anyway, it's called Money 360, and it goes over all of this in great detail. Okay, and it costs you less than a weekend going out to get enrolled. Like literally, it's severely underpriced. But I want to keep it there because I like, you know, helping people get qualified for stuff and then turning into good business partners for us. That's, you know, that works for me in the long run and you too. So it's called Money 360. I think there's currently like 950 people enrolled into that. And you should at the very least check it out. Just drop a comment here if you want to. I'll send you the link. Kevin will send you the link. One of my team will send you the link. It goes over all of this in great details: letters, templates, application sequences, you know, debt restructuring, just all kinds of good stuff. Okay, it would behoove you. That's a fun word, huh? Behoove. I wonder where that one came from. Anyway, it would behoove you to, at the very least, check it out. All right, just I'm not telling you to go buy it. Just look at it. Just look at what's in it. Okay, then make your own decision from there. Okay. All right. Kevin just said message him for the link. You can do that. Please blow him up, not me. I get enough messages every day. What's next? Well, we can get, you know, that's my social media right there. Get connected there. I got a lot of stuff in my highlights that is helpful. There, invite other people to the group, or you go watch the other videos in the group if you're just joining us. Go check out our website, impruvu.io, and just get plugged in. And, you know, again, it's one thing to read about stuff in a book or to watch a presentation or to see somebody tell you what to do. Okay, you can do that all day long. It's not going to do anything for you unless you what? You do something with it, right? So don't just sit here and take this information and do nothing with it. Okay, that's a waste of everybody's time. Go put it to work for you. All right, like we're giving you a lot of free stuff here. Just the least you could do is improve your situation with it. Okay, we're here to help. All right, the sun is out. We are going to wrap this up. I appreciate you guys coming out, and we will see you on the next one next week.